Hello, everyone. Want to make sure that you can hear me and that you can see the screen. Let me know how you are doing. Welcome. Let's make sure we have no double sounds and the like. Excellent. All right, let's get after it, shall we? We've had an incredible couple of weeks, and I wanted to start with the daily picture. Well, Donald, it's not like that doesn't happen to me every single time. I'm always having some sort of problemo. So, listen, we've got a lot to cover in a short period of time. Taking a look at what the market is doing. We've had a lot of noise. Things were fairly quiet in terms of what happened in over the weekend. I felt like the weekend would be a little bit noisier. But here's what we've got. We've got very oversold levels. The RSI and the MACDs and all of those momentum indicators that people watch are very oversold. So all the big market technicians are saying, hey, careful with thinking it's going to fade some more because there's a lot of pressure building to buy. So that's the first thing. The second thing is a product I look at called the UVXY, and it's a tradable VIX, and it also is sitting up at resistance. And so this tells us, okay, we've got some resistance. The charts are sitting down at frontline support. Everything still looks bad. We are losing a little confidence in everything that's being said because the rhetoric goes back and forth. And so this is what is happening for us. So that being said, let's take a look at the big pictures overall. First of all, what I've got here is the central pivot line, and we're going to be staring that down a little bit, but I want to go through all the instruments so you can see what's actually happening in the charts and what we might be looking for. Now, take a look here. The momentum indicator that I use, called the Chandi oscillator, but this might be an RSI. I can't remember. Let's see. RSI, nice and easy. So for the RSI, we had only a couple of other times in the last year that we've had this kind of bottoming. So the first time was in March of 2025. We had a savage bounce and then another savage fade, and then the real bounce started holding. I suspect we repeat this. So seasonality perspective, all the data that I look at says the same thing. It says, hey, we're going to have very volatile price action in the next 2 to 4 weeks. It's going to be very volatile. And so we could see something like this based on the prior formations that we've seen when the RSI gets this low. So we want to prepare to see price action hold. And the line that we want to see held is this 6,409 all the way up to 6,415. So you want to write that down. We've got 6,451 as the central pivot, and so that'll be what we're watching. Let's go to the NQ, MNQ we're watching. Same sort of thing. Take a look. So far below, about to rise it up here. The last time we were down here, a little bit more savage, right? This one reads about 32, and it looks like it was about 27 on this fade. And then we bounced and then had a savage move down. But notice, these are daily candlesticks. So chop, 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 chop. Good sideways patterns to trade, but the ranges could be very big. Where do we want to get and hold? Same thing. We want to see us old resistance, new support, and that number is 23,390, maybe 23,400. And you can see we're a couple hundred points underneath that. Let's take a look at the micro Bitcoin. Now remember, this one's been trying to base for better part of a month and a half, almost 2 months. It's sitting right down here in a region that could easily give us a buy zone. These pink lines are the lower pivot lines on the formation, but they are trying to hold this price action in this range. If the market does bounce, so will Bitcoin. And it's got a $10,000 ride if it is able to. So could be a little bit of a liquidity injection, a lot of traders that are short, caught flat-footed because the narratives are so dire. There are going to be a lot of people piling in short, and they're just not going to see that everybody is sitting on that side of the boat, and the levee's going to break. It just happens that way. You know, the market loves to take as many people to the cleaners as possible. Let's take a look at oil. Oil's another one that is potentially in a space where it could see a topping formation. We are still inside of this candlestick of March 9, when we just had everything really start blowing up on us. But we are, as it were, up above the 50% range of that line. And so the pullbacks are likely to be buy zones here, okay? This should fade if the market bounces, but if it's a technical bounce, the relationship between oil and the broad market could break. So if you've been using oil to trade the broad market, you want to be careful. If we're looking at reflexive bounces, it could end up really shifting things around. Lastly, let's take a look at gold. Gold also bullish. These are the only two guys that are bullish right now, sitting above their central pivots. And this one is sitting in the big fat box, right? It's in a very big sideways space. Do we think it's going to run up? Yes, but it's really, things could get very sticky in here. I believe the liquidation in gold was because some emerging markets actually needed cash because of what's going on. We're not getting a lot from across the way in all those all the folks in Asia that are dependent on this oil. Things are a little sticky over there, and especially Southeast Asia is going to have a tough time. All right, now let's go back, start looking at things. We do our analysis. I'm the same broken record every time. First, we take a look at our trend, and what do we see? We have downward flow. We are under the VWAP, under the central pivot, under the 930 candle of the opening range of the prior day, and underneath the moving averages. I just finished doing some statistical analysis with a friend of mine, and he threw all of these indicators from everywhere. He just threw them in this machine learning event and just let it go on 100 years of data. And you'll never believe what the only viable indicator is. Statistically above all the others by a long shot. It is the 200 simple moving average. Crazy. But that's what we're going to stare down. And so look at what's happened. And we will get tighter. You know, we're starting a 30-minute. The 200 is way up here, right? It's very far away. So we're going to pull in and see what's going on, and then we're going to use the pivots to help us. Near-term pivot all the way down here at 63.35. My suspicion is if we gap down, we will try to buy up the range into the central pivot and this 30-minute formation. So remember how we do it. We say, what's the trend? It's down. Where am I in location to the pivot? I'm under it. Both of those things say bounces or sells. What we are coming into, though, is a space where everybody's been selling, and they've been selling really hard. Now, remember what I say. When a market starts rising, who are the ones that are compelled to buy? And the answer is the shorts. If you're not in the market and you want to go long, you're not really compelled to buy. You'd like to buy, but you're not compelled. If you're short and the market starts running upside, you are compelled to get out of that, or you're going to throw your chart upside down. Okay? All right. So, I love you, Bruno. All right, so here we have, that's what we're staring down. And it's the same for the MES, the MNQ, the RTY, which is not as negative, but if the dollar keeps running up, it's going to be bad for emerging markets and small caps. It's going to be atrocious. So that's really what we're staring down. Now, the big thing, let's take a look at the volume profile visible range. Let's use 3 days of motion, 1, 2, 3, so we can see what's going on for this fourth day. Do you see how we are outside of range? Outside of the range of value, for sure. When we open up, we're either going to be outside range and outside value, or just outside value. I have no idea how we're going to open up, but we want to look at how are the charts behaving relative to the last 30 minutes of the trading day, because they sold off pretty stinking hard. They sure did. Okay, so that being said, any questions? The power of the shorts compel you. Yes, exactly. What indicators do you use here? I'm new. Well, first of all, welcome. Welcome. I use a VWAP because it gives me directional strength and the power of flow. I trade it only relative to trend. I don't say, ooh, I'm at the VWAP, I'm going long. Ooh, I'm at the VWAP, I'm going short. That's not how you use a VWAP, but nevertheless. And then I use 2 moving averages. This time, I've got the 100 and the 200 because I'm going to collapse into a very tight time frame tonight so we can watch the price action around these zones. But normally I do a 50 and a 200. I just want to make sure that we pay attention to those things. And then the last indicator that I use is this one, and it's called Volume Profile Visible Range. So depending on how many candlesticks I have sitting here, this will be a different story. Now, notice what they tried to do. Desperately, hey, we got to hold 63.30. We got to hold it. We got to hold it. Uh-oh, we can't hold it. And then for 2 days, we really have run in a trending pressure event. Trying to do the same thing. Here we are, 9:30 on Friday. 1, 2, 3, 4, 5, 6. So 3.5 hours or so, really trying to hold it, and then boom, it collapses and then rotates all the way down. There are a lot of people talking about the end of the world. Listen, it's not. That just sells gloom and doom, absolutely sell. you think the Iran moves still move the market strongly? Oh, absolutely. Absolutely. So
The market is open.
is the RSI? Yes, the RSI is on the top. Here we are. That's the low of the 1 minute candlestick. Excuse me, of the 30-minute candlestick. Let's see if it gets into the low of the last 30 minutes of the trading day. My suspicion is that they lure in a bunch of shorts and then cut their knees out from under them and rotate. Because the traders who are short here are eventually going to want to unwind. Now, we are gapping down. Let's go backwards in time to see if we can find the last time we were at that price. We can't seem to find it on a 30-minute. Let's just go to the daily and see where this is. All right. I don't see any wicks. 63.78, pretty good line in the sand. Last time we were here looks like about somewhere in July of last year. Here they are. Look at all of this noise, all of this noise. We've got something here. Let's draw a line right here. Right here at this day. Okay? 63.64, we lose that. We probably are going to head to this pivot down here at 63.35. Right now, the traders are saying, okay, what's going on? So let's collapse into a 1 minute. And here's what we can see in the 1 minute. We can see that this 100 simple moving average is looking really great for telling us trend. So that means bounces or sell zones. If you want to sell something on the first pass here, it would be the bounce into the last 30 minutes of the trading day. That should give you your move. Now, if you're saying, hey, I want to take it long because I think everybody's going to unwind, go for it. If you do that, your stop has got to be the bottom of the opening candle, which is at 67, and that's about a lot of points away. Okay, so let them settle out. Let's see how many contracts we have. What is that? 4,000. That's not trivial, right? The 9:30 open candle in the last couple of days. Oh, that's for the ES though, not the MES. Let's see what the ES is doing. Hang on, just 2 secs. Isn't that interesting? The MES is carrying more volume than the ES tonight. That's very interesting. Let's go to the 9:30 open and see what the volume was there. 12,000. Okay, so that is normal, right? 12, 15,000 is normal for that opening event. So here we are, super sideways. Nobody's made any decisions yet. We're still inside of the first 1 minute candle. All right, so you could say, hey, if you're inside the 1 minute candle and trend is down, I could have a short right up at the top here with only a point or two of risk, right? You could also say, well, wait a second, I think I got a long here, and still 2-3 points of risk easily. Either one you can do that with. Either one. You can do the ES, MES, whatever you want to. But that is what they're doing. They're inside of the 1 minute candle. Now, if they're inside the 1 minute candle, I think maybe you think about it, right? You go, well, maybe I ought to wait. Let them resolve. See what's going on in the space. Let's see if they stay range bound, okay? Or they break down. My thought is they are going to try and hold 63.60. I would not be surprised to get up tomorrow and see price action moving us hang on 2 secs. Sorry. I would not be surprised to see price action moving us in the general direction to the north. Somebody has questioned me. Okay, there we go. Can I put up the NQ, please? Well, of course. Let's take a look at that. All right, inside the 1 minute candlestick formation, the same. Listen, easily you could say, you know what, if it breaks there, I'm going to go short. You easily could go, hey, if it breaks above here, 23,223, I'm going to go long. So you're trading, hey, I'm going to go in the direction of wherever that 1 minute breaks. Okay? So if it breaks and then reverses, I have to close my trade off. If it breaks and then reverses, I have to close my trade off. But it's a cheap trade if you're trading the inside. If you're saying, hey, I'm going to buy it here. But it's also a cheap trade if you say, hey, if it breaks down, I think it fails and it follows in the next direction. Notice, we are underneath the 30-minute formation. We're underneath that area. So the price could continue to collapse or it can totally reverse. Here it's collapsing. Now, why? My hope was that the collapse would sit here simply because this is trend, right? But they're also carving out their way. So it could easily turn around and pop right back up. Easily. These traders are feeling out whatever process is going on here. And for me, my stop would be, hey, listen, if they come back into that 1 minute area, I don't want to hang on in here if I get up over the VWAP. I really don't, right? This completely natural rotations. Once again, we're inside of the 1 minute. So what is the takeaway here? You don't got to be all excited to jump in and trade right now. We're drowning this week for sure. Now, I really, listen, I put out a tweet earlier today and I said, hey, this sort of kind of feels like the place that you would say, you better watch out because the market could bounce super hard. I mean, really, really hard because so many people are positioned short. Or we could dance around sideways, or we could continue to fall off a cliff. Listen, back in 2007, 2008, when I was trading, we had weeks where we were oversold. And it would be a big bounce and everybody would go, oh, finally, okay, great. And the market would sell off again. And the market would sell off again. And the market would sell off again. It was atrocious. And if you weren't paying attention, you'd die a death by 1,000 cuts. And that's exactly right. It's a place where both sides can lose very easily. Your goal is to see, wait a second, where's my trend? Where's my momentum? Could you use a 30-second chart? Sure. If you wanted to use a 30-second chart, you can. If you're staring down the 100 and the 200. Or did I change that to 50? Let's change it to 50. See how close we get. Right? Are the traders trying to find a bottom here? Yes. However, what is the real battle? They are well below the close of the first 1 minute candle, and they are trying their darndest to stay over the low of that 1 minute candle. And so if they win that battle and hold over that low of the 1 minute candle, there could be a shot of price action moving to the north. Right now, all the sellers have piled up here at 23,174. I'm going to leave that here. They're really trying. You could see that 1 minute open. They can't get up and stay over it. But when they do, that's a pretty nice range you could trade. It is, wow, 50 points wide? 23, 63, yeah, 60 points wide. You could do it, right? That's what everybody's saying. Hey, we're overcooked to the downside. So people are going to try and buy the bottom. They are. And if it holds traction, it's going to wind up really hot and heavy. So we want to be very purposeful in the movement here if the price action does continue to the north. And they really are trying to hold the floor. They just haven't succeeded. They're just dancing around here. So you could say, well, I got myself a little paper cut here if I take the trade out right now. So you could do that very easily. But for me, I'm like, well, I may as well just let them try and duke it out. I mean, obviously, this is really where the stop ought to be. Somewhere around the VWAP, right? If you're looking at something. And then, I don't know if the target's going to go all the way down here, but it could. It really could. Right now, they're trading a range. They're absolutely trading a range. Okay? Anchor VWAP from the daily 4-hour. Swing low, April. Okay. That's not, there's the big bounce. Listen, folks, if you're short, here's the thing. If you're short and these candles start moving to the north, they're going to run like hotcakes. You just have to be careful about positioning. And I suspect this would be a very choppy space, if you ask me. Right now, let's just look at yesterday's formation. Let's go back and just give us, that's not a lot of time. Oh, it's not giving us all of that. Well, boo. The range, we're outside of range, outside of value. And so trend is really what we're sitting in at this juncture. So we leave it be. All right, let's take a look at gold. Let's look at something else. Oh no, let's take a look at oil. That's not a bad guess. You're on the 30-second. Yes, I wanted to see where the moving averages were sitting. All right, so we know that how we're trading oil and the broad market are inverse right now. Oil down, market up. Oil up, market down. We know that's how we've been trading. Right now, oil is trying to test the VWAP, right? And so we're looking at dips being buys because this is so bullish. But if the news is going to shift us in the other direction, we know that this is going to continue to fall. So let's take a look at our candlestick right here, right? This is our opening 1 minute. Right here. The 50% range is there. It comes down. The bounces, very likely to be sell zones if it leaves under the VWAP. At this juncture, however, it's still sitting in the 1-minute candlestick formation. So better to wait and let it resolve out of this 1 minute before you move ahead. You tried to sell it on Friday, but it kept buying up. NQ ripping and you're not in it. Well, don't worry. It's going to be all sideways. Trust me. You're going to have a lot of price action to trade over the next day. But really, you have to say, wait, what are the buyers and sellers doing? And how well are they doing it? To me, this looks awful rangy. This is our 1 minute open here. And we moved above it, and we are back inside of it. Our 50 is down, our 200 is flat. Notice, as I mentioned at the very beginning, all the data analysis we did, and I mean we used some robust analysis. The most useful indicator was the 200 simple moving average. Pretty shocking. To support on a 50K account, can I trade 50 micro golds? No. You cannot. I don't think so. It depends on the I don't know. Who could answer that question? Tesla? I know. Exactly. Okay. I would say your question shares either you are incredibly good or you're trying to throw spaghetti at a wall. I would say be careful, right? You're trying to pull a slot machine there. So I would say, don't do that. I mean, hey, listen, if you're good, have at it. But if you're not, I would say, don't do that would be my main thing that I would say. Okay. Anybody have any questions? I have been trading for 25 years. Yeah. So I've been trading a long time, a very long time. I don't like trading at this particular hour of the day. I like things to settle out. Any advice for new traders? You have a practice account in TopstepX. So first things first, get to that practice account and say, what do I think I know about how positioning works? I believe the most important skill that you can develop as a trader is to understand how price moves and when it moves and what it means when it moves. And so the only way we can do that is by actually looking at candlesticks. So if you're staring this down, without me framing it going, listen, folks, this is still sitting inside of the 1 minute candlestick. Donald, send in your Christmas card, buddy. Yeah, so if we sit down and we go, wait a second, who's winning? Buyers or sellers? Well, nobody right now. It's a tug of war sitting in between them because everybody's still jammed up in that 1 minute. Okay? So that's what you want to look for. The last 30 minutes of the day, very important. And the first retail trading hours of the day, also very important. But you want to see where traders carve out the line in the sand and see if they sit there or they move forward. Look at this. This one hit my 63.64. Daggone it. Annoying. Okay, so here we are above the VWAP, moving up to the top. Here come the buyers. This is the 50. This is the prior low of the closing edge of that trading day. So we're likely to see some sellers there. You look to the left and realize all people are doing is to buy inventory and sell it. Buy inventory and sell it. Thank you so much, Green Gal. I appreciate you. Yes, you want to size down. You want to size down. How do you start reading implied volatility? Well, the question would be, why do you want to read about implied volatility? See, my eyeballs tell me all I need to know about volatility looking at this chart. And here's what we know. Price action becomes more volatile when it's moving down. And that's why the biggest spikes and the biggest bullish runs that ever occur in bearish markets. That's because sellers are compelled to buy or they're going to blow up their accounts. You guys are so kind. So my question would be really, if you want to learn about skew, Mentor Q has got a great avenue to do that. They got a lot of free videos. In order to trade, implied vol works great if you're looking into the futures market. Into the options market. But if you're staring here looking at futures, you can just go, here's what they're doing. They're buying support, and so far they're selling resistance. But now they're above the VWAP, right? So this is going to be the next thing they want to attack. Someone says, explain more about this volume profile visible range. Why do I care about it? Well, it tells me where all the volume is sitting, right? It tells me this is value area low, just for this pocket that I'm staring down. It tells me value area low. And it tells me value area high. So what does that mean? It means all the behavior we can see on this chart, 70% of it sits in here. How do I know it's 70%? Because I have. Tell me the 70%, right? So far, nobody's resolving outside of this 1 minute candle. At the point it does resolve, we should see some better price action. But we can see the floor here, 63.64. And this 50% mark, very interestingly, is the close of that 1 minute candle. So if you're staring it down and you go, hey, I want to trade this, you could say, I'm going to try and go long down here. I'm going to try and go long at 63.67. Why can't I go long here right now? Well, you can, but you have 20 points of risk. Why 20 points? Because we're still in this 1 minute candle. We're still in the 1 minute candle. AM, the last 30 minutes, even if the last 5 minutes looks a lot more substantial in full RTY rather than micro 2K. Aaron, I'm not tracking that question very well. Last 30 minutes, even the last 5 minutes looks a lot more substantial. Yeah, well, the last, I think I hear what you're saying. Is Trump going to talk? Probably. 75-point trade with micros so far. Took off 3. Hey, good for you. Good for you. Hedge Fudge. That's a very funny name. Aren't sellers more inclined to spend on premium to sell than to buy? Well, it depends. There has to be somebody on the other side of that trade. Now, for me, I'm an option seller. But somebody's got to buy it. Market makers got to buy it, right? They got a book. They buy it and then turn it over to someone else. And I assume you mean when volatility rises. That depends. Volatility, you sell vol and you're on the wrong side, you're going to get smashed. You're going to get smashed. Yeah, Mentor is great. I love those guys. I have a question. Should price action retrace back to the volume area? That's a very good question. And the right answer is maybe. It depends on trend. So let's take a thought process about this. If this is where all the volume was collected, right? Let's say a bunch of people decided they were going to buy up here, right? And it fell out of the box. What do you think they're going to do? Let's say they bought inventory all up here in this box. What are they going to do? Well, they're going to hang on for a little bit until they can't take the heat anymore, and then they're going to puke it up. So it could sell a lot further down. But markets are engineered to go up. So the bounces are going to come when people see great value. And the way they're going to see great value is they're going to go to look at other volume profiles and they're going to go, oh, when's the last time we had this big fat looking thing? And that's why we get to see volume profiles. Okay? The K trader says a level really doesn't mean anything. You want to see the type of interaction placed at the level. Absolutely. That's wisdom right there. That is wisdom right there. It really is true. Is insider trading legal in the futures market? No insider trading is legal whatsoever. Do people trade with insider information? Of course they do. When there are billions of dollars at stake, there will be people that will be cheating. They'll be cheating. They will be cheating. And so, yeah, it happens. Now, we might say, wow, I wish it didn't. But, power and money does a lot to people. And usually it's not good, right? Actually, here's the truth. Power and money expose the type of character that you really have. That's it. There's no one answer in trading. Trading's all about context. That's very true, Shubin. Very, very true. Very true. Can you show how to draw retracements? Oh, music to my ears. All right, here we go. 1, 2, 3 on the left. Open it. Here's our fib retracement. And I have these marked out. So what you do is you highlight your fib. And let's say you want to see the retracement of the range from Friday's 9:30 formation. So I'm going to do that. I'm going to put a box at the top and the bottom, and I have a special template, and I use the 1 minute. Okay? And so it gives me, you know what, this time around, let's use the default. Okay? And so here, wow, that's almost to the tick. This 9:30 candlestick formation from the trading day on Friday gives us a very interesting range. And we're sitting right in it right now. Now, as the K trader said just a minute ago, we can only look at the behavior of a level at that level and then make a decision. Okay? Doing it beforehand, it doesn't really make any sense. So unless you're saying to yourself, hey, listen, I believe it's going to do this, so I'm going to put my trade out here, but then you have your stop to be tight. And still, even after 30 minutes open, we are still in the 1 minute opening candle. Anne-Marie, do you use VWAP? Why, yes, I do. It is this one right here. This, what color would that be? Hot pink? Salmon? I don't know. No, it's not salmon. Unless you buy the kind that's got the dye on it. Then maybe it looks like salmon. Okay. What moving averages do you use and why? Okay, so I went into this long diatribe about, why I use these moving averages, but here they are. It's got the 50 and the 200. If I'm looking at a 30-second chart, I'm going to use the 100 and the 200. I want to see what's going on. You might go 30-second chart. Well, here's what I'm actually looking for. I want it to be above the VWAP, above the 50, and I can see where the 200 is going to be. So I might estimate, hey, if I can come back in here, kiss my VWAP, and then take the long into the upper edge, I could give myself a long and fill the gap into the close of, or the last tick of the day. Now, many times we don't count these candlesticks, but I think they're very important, especially if they end up inside of the value area, which is what we're seeing, right? So far, the reason I like to use, if I go to the 30-second chart, I'm going to use the 100, not 5100. I'm going to use the 100, 200. And you can see that 100 on that 30-second. Listen, I'm not trading 30-second rotations. I'm looking for where it hits these moving averages, only because my data tells me these are strong averages to use on any time frame. What happens if it doesn't retest the VWAP? Well, let's think about that. What if it doesn't? What does that mean? If it doesn't test the VWAP, it's either going to begin trend or it's going to test the VWAP again. That's the only reason it tests the VWAP, is if it's going to give us sideways motion and break trend. But the moment it breaks above the VWAP, it's telling us, hey, listen, I'm trying to hold upward motion. So you could say something like, this is going to look exactly the same, but if I chose, where is my tool? Right here, forecasting tool, anchored VWAP. If I chose to put the anchored VWAP off of the low of the of this pre-market session, you can see it's moving upward. That means if you bought the low, everybody's green, everybody's making money, but that's pretty obvious because you're sitting above the VWAP, and the VWAP is volume weighted average price. That means of all the orders coming to and fro, all of them piled together, added and subtracted for the longs and the shorts, the longs are winning, right? And so now we're above the 100. Any kind of pullback into this area could easily give us a buy zone that moves to the north. At any time, you can go, I want to go long, I want to go short. The only answer that works for you is, what's your risk? I'm using an SMA. Could I use an EMA? Of course. I don't really care, because I only care about the slope of these lines. If this slope is down and it bounces and price bounces above it, I'm going to short it. Why? Because slope is king. Slope is master and commander. Let's go to oil. It should be sideways like the rest of everything else. Look at this. 1 minute candle. The 1 minute candle, it's still in there. Look at the slope. It's up. So what's it telling us? If it breaks, the first place it's going to bounce is to the upside. They're going to try and reflexively buy it. You see them right here. That's what they're trying to do. They're trying to buy it, trying to get up over the VWAP. There are a lot of people that are very negative on what might be going on here. The one thing I want to tell you is, don't trade your political leanings. Take your mind out of, here's what I believe should happen, here's what I wish would happen, here's what I hate about what's happening. Don't trade any of that. Just stare it down and go, what is price telling me to do? If you get there and you continually come back to what is price telling me to do, you're going to find yourself on the right side of the trade. Thank you very much, Oklator. Magenta. There we go. Magenta. That was Blue's Clues' favorite friend, Magenta. One of my kids loved Blue's Clues. Oh my gosh. Oh, this is insane. All right. Let's see. First, we have to identify a level to understand. So the easiest thing to do is find the levels that everybody else is watching. How do you do that? Pivot points. Very easy. Everybody uses them. Very easy. Everybody uses them. Remember, I tell you guys this all the time. Traders who trade for a living, for bread and butter, we are the absolute simplest simpletons you could ever possibly imagine. Why? Because we look for support, and we look for resistance, and we look for the easiest supports and resistance that everybody looks at. And those are pivot points. I am not, Alejandro. I am not. I know, Blue's Clues was great. It was so fun. I loved him. Nice to see you, George. So just remember this. The reason technical analysis works is because everybody uses it. Everybody uses it. And so what you have to find is not something esoteric, but you have to look at what everybody's looking at and say, okay, let me see if I can run with the crowd, which is what you always want to do, or you take a reflexive move that sends you against the crowd for just a little while. When you say pivot points, do you mean the indicator? Yes, the indicator. You can use Woody's pivot points, and that gives you an additional level of resistance or support. You could use Camarilla pivot points, but those are a little esoteric. I did draw it on the first candle. I did. But what I did over here in the MES is I drew it on the first the 9:30 to 10 o'clock candle for Friday. That's the Fibonacci that I drew. So yeah, you can use Camarillas, but those are a little bit more esoteric. I would just use regular pivots or Woody's pivots, which give you an extra layer. And then that means you're looking at what everybody else is looking at. And listen, if you're looking at what everybody else is looking at, they're either going to try to front run it or front run the guy who's trying to front run it. Meaning that person that is trying to jockey for position, they're going to try and battle against each other. And here's what I know. I've been really fortunate to meet a ton of people that have moved on and now work in hedge funds. We all started in the same place, but I had no desire to go work for somebody because I just can't. I haven't worked for another person in probably 35 years. And the last person I worked for, I only worked for her for 3 years. And then I went, I'm doing this on my own. So that being said, they still talk to me about all different kinds of things. And so one of the things that we learn is that they compete against each other. Let's say you're on a Goldman desk or JP Morgan desk. The two main traders, they know each other. They are competing. And so they will jockey against these big lines and try to rip the floor out from someone else. And so that's why you see that big sloshing, because somebody wants to win. What about new week opening gaps? So this notion of opening gaps tells me one thing. There's no inventory there. And if no inventory is there, it creates a market vacuum. So there's this theory that says in market auctions that nature abhors a vacuum. Now, it is true that nature abhors a vacuum, but there are lots of places where vacuums remain, right? Space. Lots of charts that are going to the moon. How Facebook, Nvidia, Palantir, all of those guys have got gap after gap after gap after gap. Right? So these notions of gaps tell you somebody's put a line in the sand. If nobody tests under that gap and stays under there, that line is going to hold. So you know it's almost a baseline where everybody said, hey, I'm not moving to the north. It's sort of like this 1 minute gap here. The chart is going to resolve at some juncture. I can't imagine that it sits in the 1 minute open all night. But in this space, especially after the research that we just had this data come out on Friday afternoon, this 200 moving average is going to tell you the tale. Absolutely. It's going to give you slope and trend, so you watch for it. If you use big time frames, it's going to be really far away. But if you use the tighter time frames, you're really going to see trend, and trend is always going to give you your drivers. The big floor here is, are they going to hold the bottom? Can I explain the hedge fund traders a little more? Well, my example about Goldman and JP, those are institutional desks, so not necessarily a hedge fund, but they do battle against each other. They do. Some of them run algos that are word related. Some of them build very energetic, high frequency ones. But at the end of the day, it's a really fascinating place if you want to read an amazing book. It's by Steve Drobny, and his name goes like Drobny, Drobny. And the book is called Inside the House of Money. Inside the House of Money. So somebody says, hey, if you're using your 200 moving average for scalping, no, I'm using it for a long trade. I just want to see directional flow in its cleanest way, right? So if I'm looking at a 30-second chart and I draw out my 1-minute chart and I see it right here, right? If I'm staring something down, I literally could go, let's see what the 15-second one looks like. 15-second one, here's the 200. It used it as the floor Friday. And so it's still very downward, so it tells me the bounces are going to be sell zones. Where will I be wrong? When it breaks my risk event. Here, you can see they're trying to bounce off of the floor of the 1-minute opening formation. That's not a coinkydink. For those of us that come to the Topstep Discord, when I show how those opening trades at 9:30 work, it's the same 1-minute chart we look at. Same 1-minute chart. So if you don't want to get yourself chopped up, you frame out, where's my resistance, where's my support, and then you take the risk. You wait up here for your short, and you wait down here for your long, and if it breaks, you get out. Don't hang on. Don't hang on. Okay? Because trend is really down, and it could continue. Don't hang on here if it breaks up above more than maybe 2 points above your 1-minute open. Give yourself 2-3 points, because if it continues, it's going to get into that 9:30 open, and that is going to carry a fair bit of volume. They're going to be sitting in there, right? You're going to pull it open. You're going to be able to see all of that volume right there. That's going to be important. All right. I have a question. When the market visits a low liquidity area and it rejects it, do market makers remain on the opposite side of what the charts show, then wick back to the areas to close those trades? Okay, so let me explain. Let me explain this notion of the market maker. The market maker gets up in the morning and his job is to facilitate trade. So he carries a book. He doesn't care about low liquidity. He cares about having a 0 delta or a 0 gamma. Don't worry about what that is. But he does not care about liquidity. He wants to know where the option walls are. He or she wants to know where the put wall is. They want to know where the call wall is. They don't care about liquidity because they want to keep their book net zero. Net zero. A lot of people don't really get what the market maker does. If I wanted to go out and sell some options right away, if I didn't have a market maker, I'd have to put that order out in the marketplace and wait for someone to take it. Now I have market makers that do it. And of course, market makers sit on institutional desks. There are a lot of ways that they approach investing, Super Dude. It really depends on the type of portfolio they have, what mandates they have, whether it's long only, short only, hedged, whatever it is. So that's that's literally a multi-trillion-dollar question. So that's really what's happening, Carrillo. in that space. So it might look like they sweep it, but it's not market makers doing that. It's the algorithm that goes, hey, that looks like pretty good sport. We should buy it. Let's buy a couple of contracts and see if it catches the bid. If it doesn't, there's a problem. If it does, then you've got that move to the upside. Any resource to understand more about them. There's a lot of hedge fund books. Steve Drubny, I think he just wrote a new one. But The Lords of Finance, that one was written years ago. It's about the 1930s and that crash. Yeah, there are a lot of good books. I mean, a lot of absolutely riveting books. There was a book that was just written about, maybe a few years ago, about Raj Radar. Well, I don't even know how to say his name. There's just a lot. I mean, portfolio managers will do anything. I have never worked at those institutions. One, I did not want to. I don't have any desire to. I literally have had two bosses my entire life. One was when I first got out of college and I was a neuroscience researcher, and then one when I was moving into the recruiting business that I, ran for 15 years. So my husband says I don't play well in the sandbox. That's not really true. But I am very directed. I'm the perfect person to slide data under the door if you need it analyzed. Just don't bother me when I'm doing it, and don't bother me after I'm doing it unless you're giving me something else to analyze. So it's not that I need to be in charge. That's so funny, VWAP George. My husband would agree with you totally. I just like being my own little butterfly and doing my thing. Yeah, so that's it. And would you believe it is 8 minutes to 7? Yes, leave me alone. Leave me alone so I can work for you. Just give me the data that you need analyzed. And oh, that's right. That was very good. I liked it. The Man Who Solved the Market, I read that one also. Also, the Ed Thorpe. That is actually the original guy that, do you ever see that? I think it was called a movie called 21. It was with Kevin Spacey, about a mathematician. His name's Ed Thorpe. He's fantastic. But he was a math professor and he learned blackjack, and then he took these kids to Vegas, won a bunch of money, got kicked up and beat up by, the mob that runs all the money out there in Vegas. And then he went into high finance. So yeah, that's right. It's good. Can you post all your books? Okay, so bringing down the house. Yes. Thank you so much for that help. Okay, so let me leave you with a couple of things to sit with while you are trading tonight. One, the range is very wide for that 1 minute, so you can use a Fibonacci to draw the range expansions in the direction of trend. My thought would be all bounces are very likely to be sell zones. The breakdown is likely to be bought, so you want to be careful down here because things are so oversold. They're going to try and give you some choppy flows. So be very careful there. You've got the range here for the opening minute for the MES. It's the same for the MNQ. Right? Let's Let's draw that one so you can see it also. Same thing. They moved out of it just a wee bit more, but not by much, right? Dancing right in the edges of that zone. Notice spiking up a little bit, spiking down a little bit, and then coming right back into the motion. But we know that the NQ loves to do this. We know they do. We know the NQ traders love to shake the trees right there on the edges, use trend to tell you what's going on. And right now the VWAP is flat, which is confirming, listen, I really don't have any trend. I'm just trying to build a base. Now, once the base is built, price action will move probably to the north. I know for those of us who think the world is going to, we're in a handbasket, you're going to be like, what? I can't believe it's bouncing. But it's because everybody's gotten on the other side of the boat. I believe the JP Morgan collar expired on Friday, Courtney. I believe. But it could be Tuesday. It could be Tuesday. Why don't I recommend my own book? I should. It's a good book. I want to revise it and do a new one. But yeah, I should. I have a problem promoting myself. Not that I think I'm fine. I just, have a tough time. Yes, that's what I thought. It expired. And Friday's a holiday. Woohoo! 4-day week for us. I, of course, celebrate Easter every day. So actually when somebody said, hey, we got a 4-day week, I was like, for what? I totally forgot that Friday was Good Friday because every day is Easter for me. So that's it, everybody. Thank you so much for visiting with me. I appreciate you. Yeah, so nothing on Friday. I appreciate each of you for spending the time with me, and I sure hope I get to see you in the rooms somewhere. It'll be great. Come visit us on Topstep. And Bruno, thank you so much for being a great moderator. Can't do it without you. You're awesome. And again, thanks to each of you. I appreciate you spending time with me. Take care.